Hi guys, welcome back to the channel. My name is Dave. Did you know that the S&P 500 is up over 17% in the last year, and the NASDAQ 100 is up over 24% in the last year? That's outstanding. If you're a simple index investor, you've done quite well. But what has done even better? And the answer is alternatives. For example, gold is up nearly 42% and Bitcoin is up nearly 100% during the same time period. So, how can we monetize our positions within these two alternatives? Well, we can wrap it up with some call option premium, shove it all into an ETF, and what do we get? We get this lineup of alternatives from NEOS based upon Bitcoin, gold, and even real estate. So today we're going to catch up with Troy Cates. He's the co-founder and managing partner over there. He's talked to us before. We're going to talk about these three and some others as well. If that is what you're looking for and you want that monthly income, please stick around. Whoop. Troy, it has been a minute. Thank you. Welcome back to the channel. I appreciate you joining me. SPYI, we've had 3 years now with this ETF. Congratulations, $5 billion in AUM just on that single ETF. Now I see QQQI, like it's hot on its tail, right? It's at $4.5 billion. Probably will surpass it. I'm guessing 2025, 2026. And now we have the introduction of several new ETFs in your lineup. So that's kind of what we want to talk about today is some of these alternative ETFs that you've introduced. And I want to start with BTCI. So more and more people are kind of flocking to this idea of Bitcoin needs to be in my portfolio. And not only that, but I think they're looking for ways to harness the volatility of Bitcoin as well. So out comes something like BTCI, and I think it fits really well for people. So this one came out, it's almost a year now since it's been out. You have $654 million of assets under management, according to Seeking Alpha. Expense ratio is 0.98%. So we're talking about something here, high yield, and total return's been around 55% since inception too. So off to a great start. So can you tell me, just kind of walk me through the structure of this ETF and what made you bring this to market?
Sure. No, and thanks for having me back on. It has been a minute, and we have grown a lot and brought out more product. But yeah, this one, the Bitcoin one, we were really excited to get this out. We had filed for it way before even some of the spot Bitcoin ETFs or ETPs were filed. And everything just took longer to get out at that time because of the way the staff was kind of going through and trying to get the spot products out first. So we launched this product in October of last year. So as you say, just coming up on the 1-year track record. And it was an interesting time because we launched it right before the election. And obviously we know what Bitcoin did after that. So the idea behind this product is to have an underlying exposure to Bitcoin and then sell calls out of the money to bring income in, just like our other products, SPYH, QQQH, and so forth. And the nice part about this is Bitcoin, if you think about the volatility of Bitcoin, it's anywhere from 3 to 5 times more on average than the S&P 500. So you have this opportunity to harness that volatility and bring in this tremendous amount of premium on a monthly basis that can be distributed out. So what we're doing to get this long exposure is a little different than maybe others or how you might think about it. We do it 2 ways. Within our ETF, we have the ability to buy one of the ETPs out there. So right now we're long 25% position in HODL, and we can only have up to a 25% position because HODL is actually not a 40 Act fund. None of the ETPs are. So we can only hold up to a 25% position through a CFC, which is a controlled foreign corporation, a Cayman entity. And then to get the other 75% long exposure, we do that synthetically through index options. So we trade the SIBO Bitcoin ETF index options. It's either CBTX or MBTX is the minis. Right now, the portfolio is in the CBTX, and we'll just build a synthetic long where we're buying a call and selling a put with the same expiration and the same strike. And that gives us a Delta 1 position to the underlying, which is the index, which is tracking Bitcoin. And then we'll use those same index options to sell calls out of the money to bring the income in. Very similar to our other products, as you know, we're rolling on a monthly basis. Duration's a little longer. To give you an idea, when we rolled at the end of August coming into September, we rolled and sold calls that were anywhere from 7.5 to 15% out of the money. So with that added volatility, you could sell these calls further out of the money. Whereas think about SPYI, you're selling calls 2 to 4% out of the money. So you get to sell these calls further out of the money and bring in more income. And very similar to our other products, we don't have to sell on 100% of the notional. So right now, BTCI is about 50% covered. So there's 50% of the portfolio that's not covered by the short calls. And that can change month to month depending on volatility levels. But that seems to be the range that it's been in given where vol is. So it's been a really exciting product. I think a lot of people are looking at it. You have all these investors that, Bitcoin's been a hot topic for years now, but there's been investors that have looked at it and said, I hated Bitcoin at 25,000. I wanted nothing to do with it at 50. Don't talk to me about it at 75,000. Now it's over 100,000. They're like, why don't I own any of this? And they look back and they're like, so a lot of people look at BTCI and say, or look at Bitcoin in general and say, where do I buy it? Do I pick a point? Do I wait till it pulls back to 95,000 or do I buy it here? And with BTCI, we look at it as you could buy it and hold it. You're going to get that exposure to Bitcoin and you're going to capture a good portion of the upside when the Bitcoin market moves higher. But you're still going to bring in that income and those distributions on a monthly basis. So it's kind of like you could get paid while you're waiting maybe for that next move higher.
Do you have a target distribution rate for that particular product?
Yeah, the target distribution is 25 to 30% for BTCI.
Yeah, and again, total returns up over 55% for the year, so hard to argue with.
By the way, all the charts I've been showing come from Seeking Alpha, and I am a Seeking Alpha affiliate. Personally, use Seeking Alpha every day, not just for getting updates on the market, but also for research on the many alternative ETFs that I cover. So if you are looking for a stock and ETF research tool, consider Seeking Alpha and check out the links below for discount offers.
Now, when it comes to taxes on the distributions and taxes when it related to those CBTX positions, is that any tax classification with that, like you would get with 1256 contracts?
So those are not 1256. While they are index options, different categories of how it becomes a 1256 contract. It has to be a broad-based index. And since that index is really just holding or tracking the underlying ETFs that all track the same Bitcoin, it's not considered a broad-based index. So right now, as far as we understand, it's not 1256.
Next up, I want to talk about IYRI. So this is your real estate ETF. This one started back in January of this year. It's already up to $111 million of AUM. Expense ratio for this one is 0.68%. So it's broad exposure to REITs, right? So, and you own the individual REITs, the individual names, and then you sell calls against IYR.
Yes.
And okay, and I looked it up. Looks like current strikes are at 98 and 100 with IYR around 97.50. So obviously nothing like BTCI as far as being able to sell out of the money. So it has to be closer to the money. But what do you see with this product? I guess talk me through IYRI.
Yeah. So for this one, yes, we are along the individual names. So same kind of basket as IYR. So we did a licensing deal with S&P to license the Dow Jones U.S. Real Estate Capped Index. And that's about anywhere from 60 to 65 names usually. And so we're long all those names to get that underlying exposure. And then we're using IYR flex options to bring in that income. And as you said, sitting at 98 and 100, that's, slightly out of the money and 2 to 2.5% out of the money for those two calls. But with that, we're able to bring in income and the target distribution range for that is the 10 to 12% range. So this is one we saw a lot of demand for. People asking, are you going to do something in the real estate space with the income? And there's no index options on the real estate index. So we had to go to the flex options. And the flex options give us the ability to cash settle, not be called away like you might be in a traditional American style settlement.
Explain flex options, I guess, because I can't go out and trade flex options, right, as a retail investor.
Correct. So the flex options, they give you the flexibility to pick different strikes, different expirations that you might see in the listed options, but also different settlements. Normal American settlement is where you can get called away, but European settlement settles for cash like all the index options. So it gives you that flexibility in the flex options to change one or two or three of these different kind of components that I mentioned. So if we wanted to, if there's a 98 and a 99 call, but we really wanted to sell a 98 and a quarter call, we could have a market maker build that flex option where we could have that different strike or different expiration, or again, different settlement. So it just gives, and these are all cleared through the OCC. So there's no counterparty risk. The person that you trade with it to put the trade on, you don't have to close that trade with them. It could be closed with somebody else. So it's a very nice way to be able to, get exposure to some of these, ETFs like we are in IYR.
All right. Next up is IAUI. This is a new gold ETF that you guys just released over the summer. Again, we got about $80 million of AUM. Expense ratio is 0.78%. In this case, you own AAAU, which is the, what is that? Is that through iShares?
That's the Goldman Sachs physical gold ETF.
Okay, the actual physical gold. And AAAU is up 45% this year. So that's even outpacing Bitcoin year to date. But then you're using GLD for the option trades. And I assume that's because it's about 100 times the size of AAAU as far as assets under management. So the option chain is probably a lot more attractive and easy to work with.
Yeah, the options definitely more liquid in GLD. So we wanted to make sure we had good liquidity when we were trading these options, but it's a very similar structure that we talked through with BTCI. So we're long through a CFC, a Cayman entity that gold ETP or ETF up to a 25% position. And then to get that long exposure, we're using those GLD options. We build a synthetic long where we're buying a call, selling a put, same expiry, same strike to get that Delta 1 position to the underlying GLD. And then we're selling calls out of the money using those GLD options.
So when you have a synthetic option like that, you're going to have realized gains. Will you have to distribute all the income from that at the end of the year?
Yes, you do. All ETFs have to have some kind of distribution towards the end of the year to distribute their gains, as you know. But since we're doing monthly distributions, we usually meet that requirement, throughout the year at some point anyway. So there's, we haven't had an instance where we have 12 distributions and suddenly we have to have another one or a very large 12th one. There are funds out there that have different tax elections that might force them to do larger December distributions than they did for the previous 11 months. But that's not how these funds are set up.
I always think of gold as kind of the safe haven asset, store of value. That people and I've never been a gold bug myself, so I've kind of stayed away from it. I've owned GLD a few times in my life. But who's interested in this product? Again, are they just trying to find ways to monetize their gold?
We've seen it across the board. So definitely a good individual or self-directed, retail presence coming into the product. But we've also had a lot of advisors have it kind of across their mandate of X percentage of a client's portfolios in gold. And then they're looking at it and saying, oh, if I could have part of that earn some, income throughout the year, maybe that makes sense too. So it's been as you mentioned, the product's grown. I mean, we launched in early June, so it's still a very young product, but we've brought in a good amount of assets. Performance has been great. And I think, a lot of people were, again, asking for this across the board. We were hearing from a lot of advisors saying, we love your product. I have to hold this portion in gold. Have you looked at gold? Have you thought about you doing something in gold? So that's kind of where it started to, we started to kind of go to figure out how we could do this and what would make sense.
And then aside from that, you've started to do QQQH and SPYH. These are your hedged equity income ETFs. So they kind of pair up nicely with QQQI and SPYI. Mm-hmm. But in this case, you're going to be buying some puts out there too as protection.
So I guess they're both similar in how they're structured, but I'll use QQQH. Long all 100 names in the NASDAQ 100, so similar to QQQI. And then similar where on a monthly basis, we're selling a call out of the money to bring income in, but then we're taking some of that premium and buying a long put spread. So using those NASDAQ 100 index options on a monthly basis when we roll, we're selling one call that's usually, called 2.5% or so to 3% out of the money, depending on where volatility is. And we don't have to sell in 100% of the notional. Right now, to give you an idea, it's about 75% covered. And then we're taking some of that premium and we're buying a long put spread on 100% of the notional. And what that looked like when we rolled it was a long put that was anywhere from 5 to 7% out of the money, and then a short put selling away that insurance anywhere from 12 to 15% out of the money. And that's giving you a measure of downside protection on a monthly basis in that range. So if the market were to sell off, like we saw in, say, April during the tariff announcements, you're getting that protection in that period. And then if the market moves higher, since we're not 100% covered and we're selling calls out of the money, you can participate with the upside move of the NASDAQ 100. And it's very similar for SPYH, owning all 500 equities there, using S&P 500 index options. Again, it's in a put spread collar. So you're long a put spread and then selling that call on the upside to bring that income in. And the income ranges are a little lower than what you might expect from, say, QQQI. That's giving you 14 to 15%. QQQH is in the 9% range, where SPYH is lower than SPYI's 12% kind of distribution. SPYH is usually in the 6 to 8% range, yielding just under 8% right now. So again, giving up some of that income for that, more conservative, call it measure of downside protection. And it's really, we've seen a lot of clients go into it because they love QQQI or SPYI, but maybe it's a little too much equity risk for them. So they want the income, but they still want to be involved in the NASDAQ 100 or the S&P 500. And they look at these products and say, maybe I'll take less income and sleep a little better at night because it's a less volatile product.
We're at 52-week highs. It seems like half the year. That's the time to buy QQQH, right? And then if we have a 5% decline, you buy QQQI. It's 10% or greater, you roll into QQQ straight up.
I'm sure there's some people out there doing that.
All right. Well, that's awesome. That all sounds really good. How about new ETFs? You guys, how many ETFs are you up to now?
So we have 12 ETFs right now.
12 ETFs. Anything new on the horizon that you're looking into?
Yeah, so we have a few in registration. So we have an international fund, which will be launching next week, tickers NIHI. We're excited to get that one out. That it will be the NEOS MSCI EFA High Income ETF. And that one will be long. To get that international exposure, will be long in ETF. And then we'll be trading, there's international index options, MXEA index options, which will be trading those to bring in the income. And then we have an Ethereum high income ETF that we're looking to launch hopefully towards the end of October. So we're excited about that one. And then one that we just filed is our boosted series. And this will be a boosted version of SPYI, QQQI, and BTCI, where the leverage will be a little more thinking long-term versus intraday or on a swap intraday kind of leverage. And so a little different than what other levered products are out there, but these will be on our own ETF. So it'll be an interesting spin on it. And we're excited to get those. That'll probably most likely come out somewhere in the late November timeframe is my guess. But it's an exciting time at NEOS. We're really looking forward to getting more products out, having more solutions for people to use that are looking for income in this market and looking to harness the volatility of different underlying reference assets, whether it is gold or Bitcoin or real estate or the S&P 500. We hope they think about NEOS when they're looking at this market.
People on my channel are very excited about the new products that you have coming on and the products that are existing. So I hear mostly positive feedback. So it looks like a bright future for you guys. So keep it up.
Thank you.
So it's always nice to hear from Troy about their current lineup and what they have in the works. I personally do own a small position in BTCI. I also have some of their other funds like QQQI and SPYI in my portfolio, and my income portfolio that I'm building out slowly over time. Good products, good team over there, and worth following. They've grown to nearly, I think he said, about $15 billion of AUM in the first 3 years. So a lot of people like their products, and I only hear really good, positive things about NEOS. If you have any questions on any of this, please ask down below. Let me know what your favorite product is. Like and subscribe if you like this type of content, and we'll see you next time. Have a great night. Whoop.